Hello traders and welcome to the Trading Fanatic channel. It's Iliya here, and as always I'm super pumped to see you. So in this video we're gonna speak about pullbacks, and most importantly I'm gonna give you a little tweak that you can implement into your strategy so you can significantly boost your win rates on trading pullbacks. So when I was starting out, and I'm sure that you as well did it, I went on YouTube searching for how to trade pullbacks, how to know when a pullback is over, and all this kind of stuff. All amazing videos. However, none of them provided me with really some sort of a rule that I can know, okay, the pullback has ended right now, so it's time to enter. And over time, I developed this rule for myself, and right now I'm gonna share it with you. It's really simple. You just have to get that concept. And I'm pretty happy to share this with you because I've been asked a lot, like, how do you differentiate between a major and a minor pullback? But this is a topic for a separate video. How do you know when a pullback is over? How do you know when a higher low has formed? So I'm gonna try to explain to you right now in the most simplest terms how it's done, and I really hope you will extract something from it. So if you're new to the channel as well, it's all about trading. I share weekly analysis, I share educational content, psychological content is about to come, and new things as well. So consider subscribing to support the channel. And if you eventually like the video, make sure to hit the like button to support me. And what are we waiting for? Let's jump onto the whiteboard first in order for me to show you actually the concept, and then we're gonna see how we can apply this onto the charts. So let's go. Alright, so before we dive into it, I just want to let you know, and I'm sure you know this, and it's a little bit of cliche, but there is a very kind of common concept amongst the financial markets. So you have to buy an instrument low and sell it high, or you have to sell it high and then buy it back low. This is it. This is how people make money, and this is how the market operates, yet too many of us are trying to overcomplicate things. We tend to search for the best strategy out there, for the most complicated strategy, for the best indicator, for the most fanciest charts and whatsoever. Yet, if you just understand, and this is why I love price action, then you actually are way ahead of the game, because indicators are built from price action. And if you understand price action, then you're one step ahead of the indicators. Like, I have nothing against indicators because I'm using some as well, but the understanding of price action is fundamental, and we're gonna have a look at it right now. So getting back into the topic, pullbacks. So imagine we are in a downtrend on any time frame. We're gonna dive deeper into time frames later. We have a strong push to the downside. Imagine that we are just in a downtrend. We have a strong push to the downside. Do we want to sell right here? Well, no, we don't want to sell here because price is already too low, and we don't want to sell low. We want to sell high. And when the problem comes is when the market starts to correct, to retrace, to pull back, all words for that correction phase, right? And the biggest problem is, when will that correction stop, and when will the market move to the downside so we can enter our trade at the top without getting stopped out right here, or right here, and just go down, make that lower low, and take our profits? This is the biggest question, and I'm gonna share with you a few tips from my experience. There are actually numerous ways to know when that pullback will be over. There is the trend line way, the EMA way, structure way, support and resistance, Fibonacci, everything. But there is something that you can implement into your strategy so it can make it easier for you. So to get into it, as I always speak, not always, but I have a few posts on it on Instagram. You have to give every time frame a task, right? So I get a lot of questions, bro. If I'm in a downtrend on the 4-hourly time frame, I have a lower high, but the hourly time frame and the 15-minute are extremely bullish. I don't want to sell. What do I do? Well, this is it. This is where you're going wrong, and I'm gonna show you right now what to do. So every time frame needs a task. What I do, 4-hourly time frame is for direction. This is for the trend. You can use the daily as well, but you have to drop one time frame lower. For example, from the 4-hourly, we have to go to the hourly time frame to see for the structure. This is structure, this is direction, and then one time frame lower for me is the 15-minute. This is for entry, right? So you can use daily, 4-hourly, hourly, right? My drawing sucks, but you get it. So this is it. I will do my example. So imagine we have that push to the downside and we have a pullback. We don't know when the correction is over. We can draw our Fibonacci. For further confidence, we can draw our trend line, and we can draw our support and resistance from the left. but I don't even use them anymore. Just imagine that we have a push and we have a pullback. And price is sitting right here, leaving us a little wick or something like this. This correction right here, this price action, when you jump to the lower time frame, if this is the daily, in our occasion is the 4 hourly, when you jump to the lower time frame, this right here will be an uptrend, right? And this is where people get confused because they see an uptrend and they're like, oh, the market is trending up, but no. So my biggest tip from this video that I want you to extract, when you're looking for sales, uptrend is your best friend. But an uptrend on the lower time frames. So if you're looking for a sell right here, your best friend will be an uptrend on the 15-minute or on the hourly time frame. So write that down and remember it, because when we switch right now to the hourly time frame, this correction right here will look something like this potentially. Sometimes it's smaller, sometimes it's choppier, sometimes it's not unclear, but you need an uptrend. Why? For the very simple reason which is you need a break and a retest of that uptrend. And this is how you don't get stopped out at those places right here, because you wait for the break and the retest, which actually happens on the 15-minute or on the hourly time frame and everywhere. And I'm gonna show you on the live charts right now, right? So hourly time frame is for structure. What I need to see on the hourly time frame is that level right here starting to hold. So there are numerous formations that you can look at. You can have an uptrend and then a double top. You can have an uptrend and then a head and shoulders formation potentially. You have plenty of them, but what you want to see is the market failing to break. So when you have a 4 hourly rejection, again, another tip from me is to try to imagine the bigger time frame candlesticks. How do they look like on the hourly time frame? So this rejection, for example, what it looks like on the hourly time frame, if you imagine it, imagine the market open right here. So the market opens right here, it creates a massive push to the upside, but then it retraces like this and closes right here. So this wick creates a strong push to the upside, but then the market retraces all the way down and creates this. So this is your hourly price action. And what you expect then is the market just to pull back to form a lower high, a double top, and then you take your short. All right. So I hope this concept is clear. Again, repeating it again, in order to take a short, like let's give an example with a daily time frame. Imagine this is your daily and you have a little indecision. When you go to the 4 hourly time frame, this price action right here, the correction is gonna be an uptrend. So what you want to see is signs of that uptrend getting like exhausted, either a bearish engulf, either an indecision candle or something like this. And then the 15-minute comes into play, which I'm gonna show you on the live charts. So again, in a downtrend, an uptrend is your best friend, and in an uptrend, an example for an uptrend, if you have a push and if you have a pullback, this bearish pullback is creating downwards structure, right? So you're overall trending up, but if you go to the hourly time frame, you will have a little bit of a downwards moving structure. So what you wait there is for a break of that trend line and then for a continuation to the upside. So this is a little tip from me, and right now we're gonna jump onto the live charts and show you some live trades as well on how to implement this. Alright, so here I have a live trade on USD CAD today, so I'm gonna walk you through it. It was shared on the weekly outlook and setups as well, so very nice setup. We just have an uptrend right here. The market broke below the uptrend. What we are waiting for is for the market to correct again. When the market pushes strongly to the downside, do we wanna sell right here? No, we don't, because we wanna see the market pull back. And again, the question comes, when will the pullback end? Well, what I need in my rules is I need at least one 4 hourly rejection to show me that the market is struggling to break. But I just need the market to pull back on the 4 hourly time frame at a place that I want to see price to pull back. So for example, this support and resistance level, this Fibonacci area 50%, the EMA as well, as you can see, perfectly tapped. So this is what I need to see on the 4 hourly. Done. This is my task for the time frame. Then I drop to the hourly time frame. And again, what do I need in order to sell? Again, what is your best friend when we're looking for sales? Right, it's an uptrend. So you see that on the hourly time frame, some of you guys will say, oh, but this is too bullish. Why do you sell against it? Well, I don't sell immediately. I wait for the market to show me that uptrend and that I need an invalidation of that uptrend or just some signs that the market is starting to fail. Like on this occasion, we had this nice candle exactly from this support and resistance level as a nice bearish engulf. And then even we had a strong hourly candle to break and close below all of this. But when I saw this candle right here, what I did is I went to my entry time frame, because again, the criteria on my hourly time frame was satisfied. I had an uptrend. I had my first signs of the market failing to break above. Then I dropped to the 15-minute time frame, and this is where it gets fun because this is where you start to look for your entry. Same applies, guys. You need an uptrend, so that uptrend on the hourly time frame will be much better illustrated on the 15-minute. And as you can see right here, you have a nice trend line to the upside. You have price. Yeah, this is news. But we have price creating push, pullback, higher lows, higher highs, higher lows, higher highs, so higher lows right here. But see that the market, when the market pulled back, it failed to create a higher low and push to the highs. And then we had a massive breakdown to the downside. And this is actually when this very strong hourly candle closed. Now I know that the pullback is over, right? And this is my tip from you. An uptrend was broken. That uptrend was the correction. So the disadvantage of this one, guys, is that you don't get at the top right here. But do you know when is the top? Well, you don't know, and probably if you try to do this, you will get stopped out too many times. What I do is, and what I found works for me perfectly, is to wait to see when the pullback is over and then just jump onto the train after it's done. So what I simply have right here is a strong break to the downside, waiting for the correction again. So this time on the 15 minutes, I don't apply the uptrend because we have to go to the 5-minute probably. But even if you go to the 5-minute, guys, have a look. 15 minutes time frame, if you wait for the correction, if we're sell biased, we have a push and we have a pullback. How do we know when this pullback is over? Well, you can apply the same principle, but on the 5 minutes. Have a look. We have a push, pullback, push, higher high. Well, when do we broke the higher low? Right here. Break, retest. Beautiful entry right here. So you would have suffered a little bit of a drawdown, but if you took your trade from here, stop loss above right here, you would have actually hit take profit already. While right now, price is struggling to hit my take profit, right? Same situation applies. You're looking for shorts from your 15-minute time frame, but in order to see when the pullback is over, you wait for a break and a retest of structure and a failure to make new higher highs and higher lows. Right? So yeah, this is it, guys. It's super simple. It's just structure. It's just waiting for the market to break, to come back for a retest. It's true that the disadvantage is you can get smaller risk to reward. You can get less pips to brag about. But again, if your stop loss is low and you can nail a nice day trade like this one, although it failed to take profit for now. So I really hope you extracted something from this, a very short video. I'm gonna speak more about this, provide you with more insights. So make sure to let me know down in the comments if you found this valuable, if you need further explanation, further examples, and yeah, even more. So thank you for watching up until now. I really appreciate it, guys, and I really hope you extracted something valuable from it, and see you on my next video.